Welcome back to Explain the Charts, your go-to source for in-depth market analysis. Today, August 15th, 2025, our focus is squarely on Tesla, ticker symbol Tesla, as we break down the latest news and its reflection on the charts. Let's kick things off with the headlines that are capturing market attention. Prominently, Yahoo Finance highlights Tesla's aggressive ramp-up of its Robotaxi plans, a narrative that paints a highly bullish long-term picture for the company's future revenue streams. This vision suggests a significant evolution beyond traditional car manufacturing. However, other reports, like those from Barron's, are simultaneously indicating that Tesla's conventional sales stream might be drying up. This creates a fascinating, albeit conflicting, sentiment where investors appear to be weighing future innovation against present sales challenges. Compounding the mixed signals, MarketBeat reported yesterday that Tesla's pennant just snapped, a technical pattern that often precedes a significant price move, though the direction isn't always clear initially. Furthermore, a recent Seeking Alpha article delivered a stark rating downgrade, suggesting TSLA stock should be 10 times cheaper, undeniably injecting bearish sentiment into the market. We also note the intriguing "Mark your calendars for September 30th" headline from barcart.com, hinting at a potentially critical upcoming announcement that could provide much-needed clarity or fresh volatility. While we don't have specific insider activity details available, this is always a crucial factor to monitor, as Form 3 and 4 filings by corporate insiders can offer valuable insights into a company's prospects. The current market response, as of early trading today, seems to reflect this complex interplay, with Tesla shares trading slightly lower despite the long-term Robotaxi optimism. Now, let's transition to the charts and see how these narratives have manifested in TSLA's price action. Starting with the one-day chart, a broader view reveals a dramatic ascent from April to December 2024, where Tesla surged from the low 160s to nearly $488. This impressive rally was underpinned by consistently high trading volumes, reflecting strong institutional and retail interest. However, since that December 2024 peak, the stock has undergone a significant correction, entering a more volatile, sideways to downward consolidation phase. A critical support level emerged around the $270 mark in February and March of 2025, which repeatedly acted as a strong bounce-off point for buyers. One of the most notable events on this daily chart is the sharp decline on June 5, 2025, characterized by a significant gap down and exceptionally high volume. The candle shows a drop from highs around 340 to lows near 273, recovering only slightly by the close. This massive sell-off likely reflects a major negative catalyst not fully detailed in the current news cycle, possibly related to production concerns or a broader market shift. It underscores the importance of staying abreast of all fundamental developments, even if they aren't directly linked to the current day's top headlines. Following this sharp drop, Tesla has attempted to recover, navigating through a complex series of higher lows and lower highs, indicative of a market grappling with uncertainty. The stock recently pushed above the psychological $300 level, finding some footing as it attempts to build a new base. Let's narrow our focus on the daily chart to the period from late March 2025 to late June 2025 to better understand this recent volatility and the establishment of key levels. Here, you can clearly see the strong rebound from the $270 to $280 support zone in late March, propelling the stock back towards the $340 level. However, this rally was met with strong resistance around $360 to $370 in May, a level that has historically proven difficult for Tesla to sustain. The subsequent sharp decline and the June 5th gap down we just discussed are prominently visible within this filtered range, emphasizing the ferocity of the market's reaction. The fact that it bounced off the 280 area again after this sharp fall further solidifies this as a critical long-term support zone. The resistance around the $340 price point also becomes quite evident from the multiple rejections seen in early June. Shifting our view to the 1-hour chart, we gain a more granular perspective on TSLA's intraday trends and short-term movements. Over the past few weeks, the price has generally been in an upward consolidation channel since the early August lows around $300. However, the last few trading sessions, leading up to yesterday's close, show a slight pullback within this hourly time frame. The candle action indicates a battle between buyers and sellers around the $335 mark. Immediate overhead resistance on the hourly chart sits around the $340 level, a psychological barrier that Tesla has struggled to decisively break. To get an even closer look at the immediate price action and recent trading dynamics, let's examine the 15-minute chart, specifically focusing on the last 24 hours of trading data leading up to yesterday's close on August 14th. Here, we observe the stock attempting to hold above the $335 mark after a minor intraday dip. The volume on these shorter timeframes remains relatively healthy, indicating active participation from both retail and institutional traders. Notice how rallies typically lose momentum as they approach the $340 level, and how dips find tentative support. For short-term traders, observing these microtrends is crucial. A break above 340 on this 15-minute chart with sustained buying volume could signal a short-term bullish continuation. Conversely, a decisive break below 330 could trigger further selling pressure down towards 325. The candlestick patterns in recent hours show smaller bodies and longer wicks, suggesting indecision and volatility as market participants react quickly to every piece of news. The high transaction counts also highlight the rapid buying and selling occurring at these key price levels. In conclusion, Tesla presents a complex picture, offering compelling reasons for both bullish and bearish outlooks. On the bullish front, the long-term potential of Tesla's Robotaxi division is a game-changer. Successful execution here could justify a significant re-rating of the stock. Tesla's continued innovation and brand loyalty in the EV space also reinforce its position as a market leader. Any positive news from the highly anticipated September 30th event, perhaps a new product announcement or a significant Robotaxi update, would further bolster the bullish case. On the bearish side, recent reports of slowing vehicle sales and a notable analyst downgrade signal current operational challenges that cannot be ignored. Increasing competition from traditional automakers and other EV startups also poses a threat to Tesla's market dominance. A deteriorating macroeconomic environment could further exacerbate these concerns, leading to reduced consumer spending on high-value items like EVs. Let's recap the important price levels to monitor closely. Our immediate resistance level is at approximately $340. A strong break above this, ideally on high volume, would likely open the path to the next resistance zone. The significant intermediate resistance is between $360 and $370, a level that has capped rallies in both December 2024 and May 2025. On the support side, immediate support is found in the $320 to $325 range. A breach here could indicate short-term weakness. The major long-term support, which has proven resilient multiple times, lies between $270 and $280. For an unbiased prediction, Tesla is currently in a state of consolidation around $330 to $340, reflecting the tug-of-war between optimistic future prospects and present challenges. A bullish breakout above $340, especially if supported by favorable news from the September 30th event, has a 60% likelihood of targeting the $360 to $370 range. Conversely, a bearish breakdown below the $320 support, perhaps driven by disappointing news or broader market weakness, carries a 40% likelihood of retesting the robust $270 to $280 support zone. Keep a keen eye on volume profiles. High volume on breakouts or breakdowns confirms the strength of the move, while declining volume can signal exhaustion. The September 30th date remains a key catalyst, potentially introducing significant volatility and dictating the stock's next major move. As always, remember that market dynamics can change rapidly, and this analysis is for educational purposes only. It is not financial advice. Please conduct your own due diligence and consult with a financial professional before making any investment decisions. Thank you for watching this in-depth analysis on Tesla. If you found this helpful, hit the like button, subscribe to explain the charts, and leave your thoughts in the comments below.